Hello, good evening, everybody. Can you guys hear me? If you can hear me, can you please type good evening in the chat? Okay, GE. Okay, not our general elections, but GE in the chat while I open up my YouTube and see whether my sound and everything is working. Let me just check. Yeah. Oops. Can you guys hear me? Okay, let me see. Okay, hello Trisha. Okay, Trisha is our loyal fan. Hey, hi Hingo. Nice to see you guys here as well. What about the rest? Is there any other people as well in the chat? Okay, if you can hear me, type as well. Hello Damien, I see you as well. Okay, very good. Everybody can hear me. Okay, today, do you guys know what is the topic that we are talking about? Can you guys make a guess? Okay. Something that you guys have voted for actually is actually portfolio management. Okay, I'm pretty surprised that you guys chose portfolio management, because I saw that at the start of the voting, right, a lot of you guys actually typed that you want to learn more about ETF. So actually, right, after I see that most people are typing ETF, right, then I go and prepare my slides already, and then after that, right, towards the evening time when I was trying to close the poll, right, then I see, actually more people want to learn about portfolio management. Is it because it's towards the end of the year already and you guys are thinking to review your portfolio? Okay, very good. Damien says positioning for 2026. Okay, Hingo also say time to review portfolio as well. Very good. It's a good time to take a look at your portfolio. And also for those of you who are in Singapore, it's also time to look at your CPF as well, because it is the end of the year. Remember to go and either top up your CPF so that you get your tax rebates, and also quite a number of things that you can do using your CPF as well. So remember to do that. Every year I always talk to my financial advisor, and then roughly you would know, like, hey, towards the end of the year, what kind of your whole year's NOA, how is it going to be like. Then probably you can do certain things to kind of like save you a little bit of money. Of course, if you put it into your CPF, then you can't take it out or you top up to your SRS. There is a lot of things that you can do, but once you put it in, you cannot take it out unless you are towards your retirement age. And also for my own mom as well, we always top up our CPF. I think that's, if let's say you are in the after 60 years old, the government do top up. It's called a 1-for-1 or something. I can't remember what's the term for it. So once you either put $600, they will also top up $600 in your CPF. So you can also do things with that $600 as well. So don't forget that a lot of times we just need to optimize our portfolio by a little bit, okay, and we can make sure that we are optimizing it as well, make 100% of our money work for us. Okay, very good. Okay, so now I just want to share my screen so that we can have a look at what's gonna happen today. Okay, so now our favorite topic is portfolio management. By the way, y'all should be able to look at my screen, right? Sometimes this software that we are using, right, I'm also trying to figure out whether we can see everything as well. Let me check whether everything is okay. Okay, should be no problem. Yes, so when we actually look at portfolio management, right, a lot of people you don't know what portfolio management exactly means. Okay, so I actually went to find the online idea of what is portfolio management. They actually call it the art and science. I didn't know that I was doing arts and science when I'm actually investing. So very interestingly, art and science, selecting and overseeing a group of investment to meet your long-term financial objective. Okay, the keyword is long-term. Okay, we always say, hey, think long term, and your portfolio, right, is something that will reflect whether you are a long-term investor or not. Okay, so together with your own financial objectives and your risk tolerance of course, this is yourself lah. Most of us, we should be managing our own portfolio. We are retail investors. Some of you guys, maybe if you have your own company, okay, you are managing money for your company, or you are working in the finance industry, then you are managing money for other people or institutions. Then a bit different lah. But I would say that majority of us, we are managing for ourselves, which is retail investors lah. Okay, which is very, very straightforward. If you ask me, because when you actually manage other people's money, right? Now I'm also helping my family members invest. You need to answer to your shareholders. When you buy and sell, certain companies, certain stocks, you need to consult them a little bit. But the best is you just do it yourself lah, or you teach your family members, your kids, your parents, you teach them how to invest, then they can do it for themselves. That is the best case scenario. If not, there will be a lot of ding dong here and there. You need to consult. Then by the time you consult finish, maybe the opportunity is gone already. So the best is you just teach them how to do it and let them do it themselves. I think that is the most helpful if let's say you want to help someone to become financially free. Okay, another way is you can introduce them to watch our Next Level Live, okay, so that they can also learn how to invest themselves lah. Okay, so I'm very curious about this thing. Can you guys type in the chat, how many stocks do you guys have in your portfolio? Okay, there is a magic number that is the most optimized number that you should have in your portfolio. Okay, I want to test you guys and see how many stocks you guys have. Okay, personally, I did count right before this webinar. I have about 15 stocks. Okay, 15 stocks is my number. So I think that is pretty manageable for myself. And usually I don't easily exit certain companies in my portfolio lah. So it's pretty manageable lah. Maybe once every earnings seasons, which is now, I do take some time to read their earnings report or their earnings summary lah. So it doesn't take up too much of my time. Okay, and wow, let me see how many stocks you guys have. Okay, Bonnie about 15. Okay, Ivan about 5. Wow, Ivan, your portfolio very concentrated, about 5. Kelvin, ETF also counted. Okay, so wow, we have someone that has 32 stocks. Okay, interesting. Okay, most of you guys are at a manageable number which is about 10 to 15. I think that is a pretty manageable amount. Okay, someone also have 4. Okay, joking hazard. Okay, I hope you are not joking with me. 4 stocks in your portfolio. Maybe you guys just started. That's also fine as well. Okay, but it's always up to your personal preference. If let's say you don't have that much time and you want to have a bit more concentrated portfolio, right? Then I think 4 or 5 stocks is really up to personal preferences. There's no right or wrong answer. But I think Google what is the most optimal number it is actually 14 stocks. Okay, the number 14. Okay, so it's a good thing if let's say you are within this range. So I think when it comes to the end of the year, December, some of you have some time, you can take some days off. Okay, how many of you are going for holidays? You are going for holidays, type the country that you are going to, okay, in December. I know that quite a number of you guys are traveling overseas, right? So when we go overseas, not to forget we do have some time on the plane as well. Apart from taking a nap or sleeping, you can take some time to look at your financial reports. Okay, the companies that you guys want to read up more on, or maybe you just take an investing book and just read on the plane. It's also a good use of your time as well, okay? Or you can just read the reports that me and Beyond always write lah, okay? For my students, we always post our stock analysis once a month, okay? So please go and read it, okay? So, okay, Joking Hazard also just started investing, okay? Very good. I'm so glad that you got started already. Ivan is staying at home, okay? That's fine. I'm also staying at home, but of course, you know, usually we do short trips to JB, to nearby countries as well lah. Okay, so okay, Japan. The rest, where are you guys going? Any countries that you are traveling to? Okay, when you are traveling, you can also take a look at your surrounding you. Okay, Japan, there's also a lot of listed companies as well. As an investor, we always want to look out for all these things that we can use the knowledge that we have, you know, things that we can touch and see whether these companies are good companies to have in your portfolio. Okay, so any of you have heard of Ray Dalio before? Any of you heard of him or read his book, you know, The Principles, the very, very thick book that I have tried to read, but I couldn't manage to finish reading it. I think when I was like probably 1/4 through the book, I actually fell asleep lah. So well done for those of you who have read it before. And Ray Dalio, right, in his book, you know, he talks a lot about this thing called the all-weather portfolio. Okay, what does all weather means, right? Which means regardless whether is it rainy season, is it market up, market down, bull market, bear market, this portfolio is a very, very stable portfolio. Okay, so let's go through like what he actually means in this all-weather portfolio. I would say my portfolio kind of looks something like this, okay, but slightly different lah. Okay, I don't have that much bonds in my portfolio. Okay, I do have last time I do have a lot of bonds in my portfolio, but not anymore. Okay, so mostly my companies is actually in stocks and options lah. So okay, let's go through his portfolio. Okay, so the biggest pie of his portfolio is actually in the long-term US bonds. Okay, there is a lot of US bonds out there. I think the most famous one is actually TLT, okay, which is the 10-year treasury bonds. There's a lot of bonds out there as well that you guys can have a look at. Okay, and his recommendation for your portfolio sizing is 40%. Okay, 40%. And interestingly, his portfolio doesn't include cash. So I do think that he does set aside cash for it as well. Okay, and for US stocks, over here it's 30%. Okay, and international bonds, he says it's 15%. And then for gold, which I also have in my portfolio, he recommends about 7.5%. Okay, if you guys have followed closely on my previous Next Level Live, I do share that actually gold performance actually outperformed the S&P 500. Okay, which that's why I think that actually puts in that's why Ray Dalio actually puts in 7.5% in gold as well. And of course, there's other commodities, 7.5 as well. Okay, so this is his optimal portfolio and this is his recommendation. So how many of you have something similar to this all-weather portfolio? Can you type me in the chat? Okay, if you have something similar like this, that means nobody. Okay, maybe everyone is slightly different lah. Okay, but there are different ways to do it, different ways to see it as well. So yeah, I do think that this is a very good concept for myself. I love the concept of having an all-weather portfolio so that you don't have to worry, you know, whenever things goes up, goes down. Of course, now there's a lot of other different asset classes from when this all-weather portfolio was developed. They are not available yet. You know, one of it is actually crypto lah. Okay, crypto as well. There are people that puts in this. I think this is something that they didn't consider inside this. And of course, there's cash. Okay, as well. So I think it's good, all good to have inside your portfolio. Okay, so when it comes to portfolio management, right, there are quite a number of types of kind of companies that I would recommend that you should have in your portfolio other than bonds and stuff like that, right? So the first kind, right, is actually growth companies. Can you guys type in the chat what are growth or what are some examples of growth companies you have? What are some examples of growth companies in the stock market lah? Just type in the chat. I see whether you guys have the growth stocks correctly or not. Okay, while I wait for your answers, okay, the next kind of stocks is actually dividend stocks. Okay, same thing. Can you guys type in the chat any example of dividend stocks? Dividend stocks in the whole stock market. Okay, wow, I see a growth stock. A lot of people type Tesla. Okay, SoFi, Mag7, Bonnie says Hims. Okay, Kelvin says Nvidia. Kelvin, Berkshire, you consider it a growth company. Okay, very interesting, very interesting. Okay, dividend examples. SPY. Okay, very good. SPY, I think it gives about 2% of dividends, and DO5, which is our Singapore very famous bank, DBS gives about I think now it's about 4.4%. Okay, when I just started investing, DBS was giving about 6%. Okay, and slowly it went down lah because the stock price went up, right? Okay, Calvin says ETF. Very good. Another kind of companies is also ETF. Okay, I will consider ETF as a separate kind of companies. Okay, even though they do give dividends as well. And I think a big part of my portfolio there are ETFs inside as well. You know, like SOXL, TQQQ, many ETF companies, S&P 500 as well inside my portfolio. And then of course the last kind is actually cash lah. Okay, we need to have cash in our portfolio. So I would categorize my portfolio in these 4 different categories. Okay, and of course our aim here, right, I think my students are very familiar with this set of slides as well, is we want to aim to have a portfolio of good businesses. Okay, everybody, can you type GB in the chat? GB stands for good businesses. Okay, we want to have dividend companies in our portfolio. We want to have asset companies in our portfolio as well, growth companies, and also at the same time we want to have some income for our portfolio, which is where we get 2% premiums using our BOSS strategy. Okay, BOSS is something that we do teach as well during our 2 hours free session. Okay, later I'll share a little bit more about that. Okay, or maybe I should share a little bit more about it now. Okay, because sometimes I always forget about it. Okay, so if let's say you are interested to find out how to get 2% of returns for your portfolio, you can scan the link below, or you can click on the link that I'm gonna be sharing over here. Okay, this is where I teach how to do BOSS in detail. How do we get 2%? How do we calculate the 2% as well? Very quick summary of how we do it. This is during our free 2-hour session, so you can also go ahead and scan the link or click on the link, scan the QR code or click on the link, or share with your friends as well if they are keen to do BOSS as well. Okay, so I won't keep the QR code up. Okay, I'll just share with you guys the link. If not, it's very hard for you guys to see lah. Okay, so back to our slides. It is where we have a pyramid like this, right? You can decide on the shape of your pyramid. Okay, maybe you want to have more growth companies as your base. Okay, where a bigger portion of your portfolio is in the growth companies and maybe lesser in the dividends, or maybe you don't even want to have dividends in your portfolio. You know, you are still pretty young. You know, you want to have a bit more growth companies, that's also fine. Okay. And for example, like my mom's age, in her 60s, right? You would like to have more dividends in your portfolio. That's also fine as well. Okay. And the question you need to ask yourself, right, is you want to be a bit more passive or you want to be more active as an investor? Can you guys type P or A in the chat? You want to be a bit more passive, you don't mind, like, don't not looking at your portfolio, your brokerage account for very, very long, okay? Or you want to be a bit more active, like every week you want to do something, or every month you want to do something. That's also fine as well, okay? Everybody is different. I just want to know how many of you are more active and how many of you are more passive. Okay, I see some active, I see some passive as well. Okay, some both. That's also okay. Okay, because when we go for more passive, right, that's where that's our asset kind of company. Okay, asset based or dividends based. And when we go for more active, right, is where we do more, let's say, BOSS strategy. Okay, BOSS. Okay, I'm using my mouse to draw. Okay, and more growth companies. Okay, so it depends on yourself and how you want to manage your portfolio. And if let's say just now you type you're a more passive investor, right? I think this one I did went through with my students before. You can go for dividend stocks for 80% of your portfolio, and then 20% of your portfolio you can go for growth stocks. Okay, then you probably don't need to monitor that much. It's about annual monitoring. Whereas if you are more semi-active investor, we add a little bit of BOSS in your portfolio. So let's say if your portfolio is 100K, okay, your portfolio is 100K, right? And you use 20% of it to do BOSS, okay, 20%, which is 20K lah, okay, to do BOSS, and you know that you can get 2% for this 20K. So you will be getting, how much is 2% of 20K? I think it's about two, should be 10% is 2,000, so 2% is about $500 lah. Sorry, about $200. Yeah, if I'm not wrong. Okay, well, now very reliant on the calculator. Okay, so you're about $400. Okay, so yeah, so if you know that you are a semi-active investor, that's how you can allocate your cash as well lah. Okay, so about $400. So it really does depend. If let's say, of course, we don't aim for just 2% for your whole portfolio lah. You will have your growth stocks working for you. You will also have your dividend stocks working for you. Dividends, we also try to aim for 5% returns in dividends lah. Okay, so you add up about 7% altogether. This is my recommendation. Okay, or you are kind of like a very active investor, which is like myself, you can choose it to do a little bit of active trading. Okay, trading means a little bit more short-term companies out there that you are looking at. Okay, so maybe a bit shorter trades. When I say shorter trades, I would say it's about less than 3 months. If let's say you want to invest in certain companies and you see that there is a bit of a short-term growth, okay, you can take about 10% of your portfolio to do that. All right, so honestly, this is the most, I think at this current climate, right, I think being a very active investor, it will be more beneficial because everyone is talking about, different stocks. I did say before that the S&P 500, it changes every 5 years. The next 5 years, maybe the top companies in the S&P 500 will be completely new set of companies already. So you really need to keep updating your portfolio according to what is out there, and also what is the latest companies that is developing the latest technology. Okay, so that's why you need to read daily, and you need to do weekly investing and monitoring. Okay, it requires more time and energy, okay, so that you can monitor more often and be more updated. Okay, so for this you can take 10% to do more active trading, and also 20% to do your BOSS, and 30% to do your growth stocks, entering companies. You can do strategy X, you can do strategy S as well for these companies, and you can still have a very good base, which is your dividend stocks, very, very stable companies as well. So all in all, you can take a screenshot of this, by the way. This is how I would categorize different kind of investors. So yeah, you can go and ask yourself which one do you want to be, or which one you prefer to make your life a bit more manageable lah. Okay, so if you are very, very busy at work, you don't have time to monitor, then maybe a passive investor will be better for you. Or maybe you have some time, after work, you can still take a look at it, then that's also very good. Or maybe if you are retired, you don't want to have a very risky portfolio, you can also go for a passive investor lifestyle lah. Okay, wow, risk management is another topic that is very interesting. Maybe I'll cover in our next session. Okay, risk management is another big topic as well that I would love to cover with you guys. So yeah, it really does depends on how you do. The key thing is you need to know what kind of companies you have in your portfolio. Maybe tonight your homework would be to go and categorize all these things. Okay, what have you have in your portfolio that you should know how many percent is in tech companies, okay, which means it's growth stocks. How many of your companies are actually in your BOSS, your income strategies, and which one is more your active dividend companies as well. Okay, that's your homework. Remember to go and do it. Okay, and the next one I really want to talk about is position sizing. Okay, and the most famous quote that I searched, right, when I was looking for this topic, is that position sizing is actually your peace of mind. Okay, can you guys type POM in the chat? And why do I say that position sizing is a peace of mind, right? Is so that you can sleep more soundly at night. And if let's say you didn't over position your portfolio, like example, if let's say your portfolio, if it's 50% in this kind of companies called Tesla, okay, which is traditionally more volatile because it is a very growth company. So if let's say your portfolio 50% is in Tesla, right? And you bought at the all-time high, okay, in December of 2024, okay, when you think that, wow, everything is going so high, I must ride on this trend, and you bought over here. Okay, you must be okay. If let's say just I think 2 months later or 3 months later, Tesla actually dropped by 55%. Okay, you see over here, Tesla actually dropped by 55%, which means while everybody's portfolio is going at an all-time high, your portfolio is not performing and it is 50% down. Okay, so that is the downside of having, let's say, a very concentrated portfolio. If let's say you just started, like I think just now, someone mentioned that just started, only got 4 stocks in your portfolio. If I'm not wrong, it's 𝗂𝗵𝗄𝗶𝗃, right? So let's say you just started, that's fine if you have a very concentrated portfolio, but don't let it stay that way. Okay, continue to add on to your portfolio so that you can buy more variety of companies to add in your portfolio. Okay, but when you just started, no choice, you just buy one stock, it's already 50% of your portfolio, right? That's fine lah. Okay, but if let's say you have invested for a while, or you have, let's say, at least a 20k or a 50k and above portfolio, I would say don't go too concentrated, because this is what might happen. Okay, it might happen to any kind of companies out there as well. When last Friday, especially you've seen that some companies really took a big hit, okay, when the last 2 weeks has been pretty rough. Then you must be okay if let's say your portfolio is down by 50%. Okay, so that's what happens when you really don't even out your position sizing. And of course now we see that Tesla has recovered lah, but you must be able to tank the period over here where a lot of companies already started recovering. And companies like Tesla, it took longer to recover, but it eventually got there. Okay, so not to say that Tesla is a bad company to have. I know there's a lot of Tesla lovers out here. Okay, so in your heart, you must be okay, and you must have the peace of mind that says that, oh, okay, for Tesla, if let's say it's down, you can buy more, you can dollar cost average more, and you're okay to hold on to the long term lah. Okay, so for position sizing wise, maximum 10% in a single stock. Okay, this checklist is something that I teach during class as well lah. Okay, so you need to pass certain criterias, then fundamentally it's okay, then you can allocate this 10% in your portfolio. Okay, and it's maximum 10%. Okay, some stocks in my portfolio this morning I was looking at it, it's only about 1 to 2%, but maximum 10%. Okay, even for different industries, right, the best is you just keep it to maximum 10%. Okay, don't try to be too concentrated. If not, like certain industries, like I think at the start of this year we know that healthcare has taken a beating as well. Then you see that wow, if let's say your portfolio has been very concentrated in healthcare, then you might have a not so good portfolio. Okay, of course, now that it recovered after a few months. So that's why I say that portfolio is so important, especially the sizing as well. So you must have the variety of companies in your portfolio, plus your sizing is also very, very important. Okay, and the common mistakes that I see a lot of people that we were coaching, right, at the start, you will confirm make this mistake one. Okay, everybody make this mistake, even for myself as well. I have also made these mistakes in the past, and this is the top 4 mistakes that I've seen now. Okay, so number 1, which is over diversifying, too many stocks in your portfolio. Okay, just now I saw someone said you have 32 stocks, right, in your portfolio. I think that one is a bit hard to monitor. Okay, unless you say that, hey, my portfolio is a multi-millionaire portfolio. It's many stocks because maybe it's passed down from inherited or something like that. That's fine. And of course, if let's say you are someone who you are okay to monitor that amount of stocks, okay, that's also okay as well. But as a beginner, right, I would recommend for you guys to have 10 to 15 stocks in your portfolio. Okay, anything more than that, as a newbie, is a bit hard to manage lah. Okay, if you're more advanced, you can do like 15 to 20. Okay, that's my recommendation. Okay, and the second thing that a lot of you guys do is you buy without your goals. Okay, what do I mean by goals is what kind of companies you want in your portfolio. Do you want more income companies, or do you want more growth companies, or you want more dividend companies? You just buy whatever people say is hot. Okay, whenever like maybe people recommend it in the news, or you see that this company is doing well, then you just enter. You don't have a goal for your own portfolio. A good kind of goal is you can target for maybe your portfolio returns. Okay, if let's say you are aiming for beating the market, you should at least aim for 20% returns in the stock market every single year. Okay, or you want to have a dividend income of maybe, or a semi-passive income, which when you are doing more selling put options, you are doing sell calls, you can aim for a passive income number. Okay, so some people aim for their portfolio to at least generate let's say $5,000 to $10,000 per month. Okay, you can aim for that as well. Okay, so it depends on what kind of goals you want to set, or maybe you want to aim for a dividend portfolio. So you want to aim for at least 5% returns, 5% dividends. Okay, so it does depends on what kind of goals you want. I won't spell the whole thing out lah. It depends on what you want for your portfolio. Some people are a bit more ambitious. Okay, you want to grow, you want to double your portfolio every 2 to 3 years. That's also possible as well. Okay, so everything you buy in your portfolio, it should suit your goals that you've set for yourself. Of course, every year your goal can change lah. You don't want to stay at 5K every single year, even though you have been topping up your portfolio, right? So you can increase it to maybe 6K, 7K, 8K as you go along. Okay, and the third one is ignoring portfolio sizing. Okay, just now I show you guys, when it comes to drawdowns, right, there are pretty much, you can even go to zero as well. Okay, if let's say a stock delisted. Okay, so when you don't want that to happen, you need to make sure you portfolio size. Okay, when you invest, you should be investing in companies that you know are gonna last for a long time. They are not giving you guys hints that it's not doing well. Okay, so that's where your position sizing actually helps you. So even if let's say a company's go bust, right? I mean, very unlucky, you made the wrong decision and this company bankrupt. Okay, it got delisted or bought over and it goes to zero. So your maximum, right, that you have invested is 10%. So you only just lose 10% of your portfolio, which I think is fine. It's not the best scenario to have, but it's also okay. Okay, so and also the last mistake that a lot of people make, it is emotional selling. Okay, emotional selling is when you are, maybe you didn't make the right decision, or you feel like, oh, my previous decision was a very rash decision. Then you, again, when you see your money go down the drain, you are very emotional, and then you go and sell. Or maybe last Friday, you see that everybody is selling, you see that your portfolio returns actually went down, but actually, I think by today, you should recover pretty much already lah. Okay, so a lot of times when you are looking at too short term, okay, it's very easy to commit the mistake of emotional selling. And these are the things that I feel would destroy people's portfolio. Okay, it happens to the best of us, don't worry. It's not an irreversible mistake. Okay, I even say also emotional buying. Okay, emotional buying is also a great mistake as well lah. Okay, but sometimes your selling decisions are more important than your buying decisions. Okay, if you delay your selling decisions on bad companies, you hold on to losses for too long, it's also a problem as well. And if you sell too early, it's also possible as well. So very, very common. And last but not least, I think it is not reviewing your portfolio every single quarter. Okay, I do it every single quarter as well for my portfolio. I think it's good to just keep up to date on what's going on. Don't be like one of my students. She actually, when she came to us, she didn't check her portfolio for 5 years already. She just put her money there and she forgot about it. And when she suddenly remember, when we opened her portfolio, it was a mess lah. So review it every quarter. Don't treat it as like, oh, I just put there and just leave it as it is. This is not like a fund manager. Your brokerage will not go and manage your account for you and help you see where to position size or where to redeploy your portfolio. So the best person to do it is yourself. And make sure you do it often. If you feel like quarterly a bit too much, then maybe you do it every 6 months. I think it just takes about 15 to 30 minutes to do it. It's not too much to ask for. And just usually just go and read up on what's going on lah. Okay. Yes, if Inside have Bitcoin will be super good. Yeah, I think Loy one says 32 includes ETF, blue chips, REITs, crypto. I think that's also good as well. As long as you're able to manage your portfolio wisely and you have time to do it, I think that's also okay. Okay, so no right or wrong answers. We are here to guide you guys to help you see that which is the best way to manage your portfolio. Okay, so yeah, I think that's really what I really wanted to share with you guys today. And I think right now, something that I really want to highlight, okay, which is, when the government reopens, there are probably quite a number. Let me check if the government reopened already. Okay, so yesterday it hasn't reopened yet, but I think very, very soon it's going to recover based on the government reopening. And oh yeah, so I think it's not open yet. Okay, so let me show you guys what I have been looking at. Okay, so the government have shut down for 42 days. Okay, that's crazy. I don't think that we have shut down for, I mean, not we lah, the US government have shut down for so long before. But today, they are actually doing the voting for the government reopening. So we will see the markets, very, very happy about this. I think the last 2 days, they have already started reacting. Okay, because last weekend, we have already started doing the voting. So I think some resources that I do want to share with you guys is one of our trade journals. I think we did share during our Halloween special. Okay, so one of the trade journals that I did share with wait, where is my trade journal? Okay, let me share the right one. Okay, later I share my actual trades. Then, the secret is revealed. Okay, so this is one of the trade journals that we did share with quite a number of you guys during our Halloween special by Bowen, Beyond, and Joyce. Okay, so this is a stocks and options tracker. How many of you already have this? Can you let me know? Or maybe you want me to send the link in the chat so I know whether you guys have it already or not. Okay, if you guys don't have it, let me know, then I can send it inside. So it's good to track what you are actually buying, okay, for your stock side and also for your option side as well. We do have instructions on how to use this sheet, okay, and also overview lah. Okay, so anyone wants this? Okay, if you want, then it's good. Then I will send you guys. Okay, I love sharing all this good resources with all of you. Okay, so you can go and make a copy of this and okay, wait, let me see whether it is correct. Oh, okay, I think I need to refresh the link. I cannot open it yet. Okay, if you refresh, I think it should be all right already. Okay, so this is a trade journal template lah that you guys can just come over here and you can make a copy so that you can save it for yourself lah. Okay, you can go and read on how to use this sheet. It's a early Christmas gift from us to you guys lah. Okay, so make use of this sheet and also go and track down what are the stocks and options that you guys have in your portfolio. It's a good habit to have lah. Okay, so Ivan says, if the government open back, will the stock market fly? I think the stock market already start to recover on Monday, Tuesday already. Okay, so I do think that the market's already factored in the recovery a little bit. So you won't see a very, very big movement, but I do think that it will start to go back to its all-time high lah. I think for S&P 500, we are just 1% from the all-time high that we have reached. Okay, so I think it has already a comeback already lah. So you won't see a very big movement like flying, but I think individual stocks, there are chances that they will start to recover much quicker lah. Okay, so yes, let me see if there's any questions that I missed. Kelvin says, I want Trump to make noise again. Very good. I think I love it. I love looking at Trump's Truth Social. I think you guys know. I love reading it, and I love to see what he actually says lah. He's a crazy guy, but a lot of times when you see the things that he do and you think deeper on why he actually says certain things and why he actually start moving the market on in a certain way, it's really to help boost the economy. But of course, I think he does have his own ulterior motives lah. Okay, so I hope that he continues making noise. So whenever he makes noise, there are opportunities out there lah. Okay, so this week actually on Thursday, by right is supposed to be announcing our inflation rates and also our unemployment claims. Okay, so looking forward to those numbers. If let's say the government reopens, we will have some of the numbers lah. Okay, Glenn say install the Trump indicator. Maybe when Donald Trump says something, then there's certain words that he use, like when 𝗲𝗏𝗃𝗹𝗃 actually says good afternoon, good evening, those kind of things. Maybe but he's too unpredictable already. Because it's so unpredictable, it's so hard for us to make a guess. Okay. Oh yes, again, we do have our workshop coming out next Tuesday. Okay, I'll be sharing on BOSS and also a little bit on Strategy X. So for those of you who have not attended the classes before, or you want to attend again, you can also attend over here lah. Okay, you can scan the QR code on the screen, or you can click on the link that I just sent in the chat. Okay, 𝗲𝗏𝗃𝗃 asked where to get the Trump indicator. Okay, let me share with you guys. Truth Social. Okay, this is the one that you need to follow. Okay, let me see. Yep. You need to follow Real Donald Trump on Truth Social. Okay. Wow. Yeah, basically this is his own media account trying to copy X lah. So I think I never log in, that's why I got so many ads. Yeah, this is where, and I actually open alerts on this whenever he tweet, then I would have a look and see what he actually says lah. Okay, very very interesting one. So I think it can match Elon Musk's tweets on X. Okay, so I love looking at it. So yeah, I do think that the year is gonna end on a good term. Okay, we are gonna see the markets go green. So make sure that you are always invested. Okay, that's all I really wanted to share today. I hope you guys learned something about portfolio management, and hope you guys also send your friends to join our workshop as well. It's a free 2-hour session where we just really teach you guys how to invest and also to take a look at the options market. Okay, especially now you see that the market has been recovering, and if you guys are not taking action, you have not invested yet as much as you wanted to, it's a good time to go and attend our options workshop and also to learn a bit more about how you can use options to accelerate your returns. So don't lose out on not doing options just because you are too busy or you don't have time to take a look at it. It only takes about 15 minutes every single month just to do what we are teaching everybody to do. Okay, so hope you guys enjoyed today's session. Okay, Ivan, good, you can go and open a Truth Social account and also to keep track of whatever is going on in the markets, and remember to invest safely. Don't forget that timing the market is better than timing the market, okay? And always stay vested, invest in good, solid companies, and also follow us at the next level. Okay, so I hope to see you guys next Tuesday for our workshop. And good night, everybody. And also have a good sleep tonight, okay? I know the market opens at a bit later today, or at least for the next few months. So remember to invest and also to sleep early. Don't think too much about it. And also share our workshops with your friend. Okay. So thank you, everybody. You have a good night. Bye bye.